I'm gonna drop it in the group. You can check that, I think, the file section, and later you can watch that. So this week is a pretty interesting week because we got a new moon coming up on the 18th, but it's kind of going to be different for everybody and where you're at. So that one's 19, and I realized Toronto was different. Yeah. So essentially 18, 19, I guess we're getting a new moon, and you already know the new moon strategy. I'm not really going to go over the whole strategy today because previously we talked in depth into that. And if you're in my training sessions or if you're in any of my training classes, we're going to tackle that in depthly. For today, what we're looking at is what is price going to do at this point. Right now we're sitting on the 2700 big figure. We above it about 885 point, 2000 point. So this week we actually traded into the 28,000 range. We kind of pulled back. Shit. Bro, who did this kind of annotation on the screen? So if you got questions, you just use the chat. You can just comment, like, do that on the screen. That's not cool. All right, so I want y'all to know, first of all, that when it comes to being trading, it's not a full trading system. You can't fully depend on it, although in some kind of situations, you can use that for your full analysis. I don't really advise that. What I do basically is I kind of make my analysis, and I'm going to use that as some kind of confirmation. So we're on the Dow Jones right now. I'm going to show you how I do my analysis. All right, so let's start. So what I like to do basically, I start from the weekly. Like if I'm doing my analysis for the whole week, all right, like we're going into a new week, so I'm definitely going to start on the weekly, and it's just to get an overview of the historical data. Really, that's what I just want to get. And right on the raw price data, what we're seeing here is price continue to reach for higher prices. I mean, if you understand how price moves, you understand market structure, and we're not here to talk about market structure. So you understand our new structure high, higher high, lower high, new structure low, that kind of thing. If you see price making that kind of move, then you definitely know that we're in a bullish market. Okay, so in this scenario, we know that when we're in the market, we move in two ways. We move out. We got impulsive swings and we got corrective swings. Effectively, that's how the market moves. And you know, we got bullish conditions right now. When I say bullish conditions, that means price has the willingness to push higher, right? And basically, what we're doing is we fill in this gap, or what we call the void, liquidity void. We fill in this liquidity void market. Price inconsistency from February. So we basically fill it, right? But it's kind of interesting when you look at the index assets. So we're going to look at the NASDAQ. And you see the NASDAQ, we fill the liquidity for it already. And like we're really reaching for new highs already, right? Good. And I want us to look at the S&P 500 as well. And effectively, we also reclaimed all the lost value in the S&P 500. But the Dow Jones actually seems to be lagging. I think DAX is also pretty high. Yep, DAX is also pretty close. So the Dow Jones is actually lagging right now. But in the sense of the market being a systematic place, we understand that we're going to get impulsive and corrective swings. That's why when you execute in a trade, you really want to take a buy on a corrective swing. Okay, so in here, we can pretty much go ahead and draw the impulsive and corrective swing. So I know some of y'all can just identify it with your naked eye for the sake of the new traders. I'm definitely going to draw it. And so that's an impulsive swing. All right. So we're going to get a corrective swing. And the purpose of the corrective swing is really to accumulate, to take all the others accumulated on this side, right? Because effectively, when we're in a bullish market, we want to buy at a discount. We don't want to buy like on a premium, or we just don't want to execute trades at any place. It's one of the reasons I like to use the weekly time frame for my analysis. Primarily, I do top-down analysis, but mainly I focus on the weekly because it just gives you a broader perspective what's going to happen. And we get another impulsive swing like that. Okay, then effectively we get a corrective swing. So what this really doing is a market picking others left below, because every smart trader out there knows that if you want to get in the market, if the market got bullish conditions, and if you want to get in the market on a buy, if you want to enter a buy position, you really want to get it on a corrective swing. You don't want to get on an impulsive swing. If you buy on an impulsive swing, you got to deal with a lot of stop loss. And you know how the Dow Jones it moves, you're pretty much going to get knocked out of your position, or you're going to blow your account. And we don't want that, all right? So we see another impulsive swing over here. And if you measure the percentage changes in these impulsive swing, I mean, the last couple of impulsive swing, the previous one here, we got the price moved 19.79%, all right? And we check the second impulsive swing. We check the second impulsive swing. We also moved about 13%, which is the current impulsive swing we're on. So not wild like the previous ones, but I think 13% increase, that's pretty fine. And personally, what I'm looking for this week, I'm looking for some sort of correction. I kind of wanted a correction last week, but then I realized that price wanted to take out the highs in June. It did that. All right, so we pretty much convinced that we're in a bullish market, especially after we took out this June high. So what we're looking for right now, though, is a correction, and the Dow Jones effectively going to 29,000, reclaiming all the lost value that we had. So after the weekly, what I like to do, I'm definitely going to go on the daily time frame and get a perspective of things, really. So predominantly, what I'm looking for is a corrective move to buy, right? And y'all know me, the weight. I don't like to sell indices. That's not really my thing, because the stocks, they only go up. So what you really want to look for is you want to look for a buy. And I know not a lot of people are actually into indices trading. So a lot of the time they expect some sort of a reversal. But what I'm telling you right now is I'm expecting some kind of correction. So it's a lot of scenarios that I'm looking for in this week, and I got buy positions around 26,000 big figure, around 26,500 mid figure. I got a lot of buy positions. So what I'm basically looking for is to enter a couple of buy positions, so that we get a little higher. Now, the fact that I say we're getting a correction, that does not mean that you predominantly gotta stack all those cells. I don't even do that when I'm selling. When I'm selling, I put stop losses, I put tight stop losses, and I don't really aim for an insane amount of pips when I'm selling, especially when the market is wildly bullish like we've seen right now. You don't really want to go put in a lot of sells, expecting the market to dive lower. And I see this analysis a lot of the times, and when I see neophytes, indices traders, I just it's kind of funny, because they always want to reverse on. They want to see the price really reverse and go like really, really down. But I tell you the truth, man, indices are way different. They kind of different asset. And so you gotta understand how they move. And I've been trading this stuff for a couple of years right now. I pretty much know how it moves. And I've seen people drop a lot of analysis, like they're gonna have an error like that, just funny stuff. They're gonna have an error, and they're gonna point indices to something like that. I'm like, bro, you pretty much want indices to get down like that. I mean, we can get it, but you gotta look at the current market scenario. You gotta look at the demand and supply. Indices ain't really gonna sink that much, like that insane. Nah, bro, it's not really gonna happen. So in here, I want to condition your thinking that we reclaiming a pretty, and I want to give y'all a solid trade opportunity. I'll give y'all a solid trade opportunity. See, we got a theory called index precedence. I'm not going to talk about it, but I want y'all to understand something. Look at this S&P 500. Let's take a look at that. We reclaimed all the lost value, right from February. This is what we at right now. Now we're about to make an all-time high, right? Nice. Look at the Nasdaq. Yep, same story. I mean, look, we're already pretty high. We already reclaimed it. Now we're really high. And that's not the whole point I want to show y'all. Back to the S&P 500 and back to the Dow. So tell me, what did you see? We saw that we got two index assets that already reclaimed this portion. The all-time highs from February, they already reclaimed it. But we got a Dow, which is still lagging. Now, indices are correlated and they move together, right? They're like three little sisters or something like that. I don't know how to put it, but they eventually gonna move together. So when we see the Nasdaq already reclaimed its lost value, we see the S&P 500 here also reclaimed its value, and we get back to the spools. We get back to the Dow Jones actually. What we start to think, then we got reason to believe that Dow Jones is eventually going to reclaim its spot. And we got a lot of reasons. We got to fill this void. We got uncorrected candles. And fundamentally, we're seeing a recovery from the March lows. So we got a lot of reason to buy the Dow Jones. I can tell you, I'm about to start some more buys. I'm just looking for some crazy dips. But really, what I want to do is I want to put in those huge buys. And man, I can hold trades for as long as possible. Like I can really hold trades, and that's what I want y'all to do. So, this challenge I want y'all to do is when you get a dip, and you know the best dips. Yeah, I like to see New York fights talk about getting a dip on a 5-minute time frame or the 1 hour time frame. I mean, they're solid dips, but the real dip you want to stack your buys on is on a daily. In some scenarios, you want to get your dips on a weekly. All right. And what's the reward that we're going to get for this? All right. So let's take this to the measure. So this is the current market price. If we take it up to the previous all-time highs, there's a percentage change of 6.13%, and it's 1,710 points. Effectively, if you're using Hugo's weight, it's like 10,700 points. So if you're gonna put a 0.01 position buy, if you get a good dip and you put a buy on 0.01, which is a micro lot, you're gonna make $1,700. Yeah, like that. But can you stand a drawdown? Because a lot of time when price is about to make its major move, it's gonna have a steep sell-off, and you don't want to be in a situation where you get knocked out of your position. Then later on, you come back to the chart and it's like really high. You're gonna start crying. Reminds me of that dump it meme video. All right, so back to the lunar phases. So when I get on a 4 hour time frame, all right, the theory is pretty much the same. What I'm looking, why am I thinking that we can get a correction here? Because first of all, we did not close about 28,000 big figure. And I told you all the previous time that the big figures and the mid figures, they are really sensitive areas. So if we close about like a mid figure, a big figure actually, then a lot of times we can expect to get more bullish positions, all right? But here's the situation last week. Although we got wild, we got really wild, we did not close about 28,000 big figure. And in here, what we're seeing is a price rejection around 28,000 big figure. And we go on a small time frame, you can see what I'm talking about. All right. So, well, when we get into small time frames, you're going to understand what I'm talking about. So when we even look at a historical data, we can tell that we got like this was a pretty strong impulse move. And this previous low actually uses reasons as to why price rejection here might be really nice, because we just, slightly above it. So what I'm weighing in right now is that if we get a correction, and since the market is a speculative place, you don't want to make a decision, or you don't want to make an analysis and think that, okay, that is so accurate. Nothing in this market is actually accurate. So what I want to see right now is a correction to the fair value of this range. So we're going to go on the 4 hour, then we can get a fair value of the range. So we end this no, what we see here, we see a massive expansion from this range. We got a first range over here. I'll mark out a range, and that's how I mark out my ranges. All right. So we see an expansion, all right, and trading higher. Now, there was a retest. Definitely, there was a retest. So we got an intention, the price willing to go higher. But everything that goes up must come down eventually, right? Yep, that is true, but not really with the index, I said, really. So what I want to do right now is, if I'm expecting sell scenarios, and I told you the reason why I'm expecting sales, we are below a big figure. That's 28,000. So we got reason to actually start considering some sales. And if you look at the raw price data, using a really wild impulse move like that, but when we got to 28,000, I think we peaked to 28,169, and we came lower, and we started even getting more lower. We closed about that previous low. So you know the drill. We got a break in market structure. We got a shift in market structure actually. If I'm going to take this position, then I'm looking to take profit, or I'm looking to get it on a buy on the fair value of this range. So what's the range? I'm gonna show you how the range is. The range from the low, the previous low, to the previous high. So this is the range we're talking about, and I want to take half. I want to get my buys. If I'm selling, I want to take profit on the fair value of this. And what's a fair value is just the median of this range. Now, I don't want it to sound so technical, but you get a concept. We want to find the mid value of the, and you can just, I mean, if you can, you can just use the Fibonacci tool to find the fair value. If you get like that. I mean, I like to draw my fibs differently. I'm gonna go to the 1 hour and show you how I draw my fibs. I'll go to the 1 hour. So, like the other time though, I was telling y'all about the big figure and the mid figure, right? So yeah, the range still remains, and we take this range. Well, I want to draw my Fibonacci. Normally, I like to use the big figure and the mid figure. 26,500. So 26,500 really is a solid range, because right here we were above these previous lows, so that's pretty solid. So we want to find a fair value. You're just going to take it from that mid figure, bring it here, but I'm going to choose quite a figure over here, because eventually price kind of spiked up like that last week. We got 28,169 or so. That is not working though. All right. I don't know why this went okay. All right, let me click here and see. All right, good. And definitely gonna put this out of 28,250. Good, and I bring it like that. So we're looking at 50%, all right, and that becomes the fair value of the range. So if effectively, I'm expecting the Dow to at least get this 50% and this 618, and we can get a deep discount 786. But the levels I'm primarily looking to enter my buys is 27375, 27168, and 26874. That's the worst case scenario. I want you to condition your mind that we definitely getting a buy. But what we're looking for right now is a good sell to grab those discount really. All right, so when we get fair value range, okay, so now we got reasons to believe that we can go high, but we're looking for a correction. That's what we're looking for. First things you want to do is look for the break of the previous low. So this low though, if we break this low, then that kind of gives you these are clean lows actually. That kind of gives you a fair idea that we can go even lower. But if we don't break this low, all right, and we kind of get a spike here, some sort of wick fishing stop runs, then we also get a reason that we can even go much higher because right now price is kind of taking a breather, really. Then I like to look for price inefficiencies, in the form of uncorrected candles. And in here, like last week, we had a bunch of uncorrected candles, but effectively we corrected them. We got this liquidity void that corrected that kind of thing. And when we look a little deeper, I think I saw some kind of uncorrected candle though. So we got an uncorrected candle here, but normally when price moves away from an inefficient zone, okay, like an uncorrected candle, and does not correct it really fast, I don't really like to pay attention to it. And effectively, it's just one. If we had about 2 or 3 or 5, then we can get full confirmation that price will reach out for this level. So effectively, as I told you, we got scenarios in the market. What I'm looking at is let the price break this low, right? Let it break and close below it. I mean, we can get some sort of stop fishing, but even if we do not sell, because we're in a bullish market, bullish conditions, you don't want to sell, and you know how the Dow moves. Can be crazy sometimes. You don't want to put up with that kind of loss. So effectively, you want to wait for price to break and kind of make some move to go lower. And once we get in this range, right, this kind of gray area, what you want to look out for really is buy positions. Start building your buy positions. And I like to build buy positions and hold them for, say, weeks, a week or 2 weeks, 3 weeks. I really can. Well, I got reason to. If I know I got reason to hold a trade, I will hold it. I can hold it. All right. Then we go to the next confluence, and okay, we got a moon phase indicator already up. So for those who don't know the moon phase indicator, I've done a lot of tutorials about that. So what we know about a moon phase indicator is when we get a full moon, like we got a full moon over here. I think we had a webinar, we had a discussion when this moon was coming up. So I don't know how many of y'all took it, because that was pretty much on point. We nailed it. 3rd August, I really remember I stacked a lot of buys on this position. I stacked more buys, and I keep stacking those buys like that. Now previously, when we got a full moon, you saw how the reaction. Okay, so we keep seeing the reactions, like really, really accurate reactions. So that gives a reason again that we can get a correction, because on 3rd August, as y'all can see, 18th August actually, we getting a new moon, and that kind of gives us reasons to think that if we get a new moon around this zone anywhere here, then price is going to spike up. That's the relative attitude. You see the spikes up, probably create some sort of a short-term reversal trend. If you go back historically, you can see that price, when it gets to the new moon, it's really going to go high. Probably, getting to, that's what I'm targeting, to a 250. My invalidation points are to a 300, but I'm targeting to a 250 that if price is going to pick sells, it should pick it around to a 250, because that's a quarter figure, and that's a really important reaction zone. So if price picks the trade here, should come lower to the price inefficiency below, right? And when we get that, that is where I start to look for my buys. Unless we got some like kind of fundamental news or some kind of breaking news, like the vaccine news or something like that, then we know the price can just crazy go up. But even that, it's just going to create a liquidity void, and we can trade out the liquidity void too. But really, we got reason to believe that we can get some sort of correction. And it kind of hurt me because I know that not a lot of people held the trades over here when we had a full moon. And when there's a new moon, I don't recommend that you want to hold a trade. Although we can get a sell, I told you we don't want to bank off the sell. We want to bank off the discount from the sell, right? All right, good. Once we got a new moon, start to look for buy position. So I'm really looking for buy positions here. And I tell you, I don't care the account balance you got. We got a big opportunity on the Dow Jones, and you don't want to miss it because that's almost 1,500 points. And if you got like, if you want to start buys or if you want to hold buys, you can try it on a small account. Open a small position and just hold it. You can make at least a rack. It's $1,000 at least because this is solid opportunity. It's just free, all right. It's just blatant. You can just see it. It's over there. We get reasons to believe that. And when I see stuff like that, it makes me so happy because I know that wait, I'm about to make us as much as I can make out of this small opportunity. So I don't know if you want to hold a trade. I'm definitely going to give my entry point. I got 2 or 3 entry points. I'm definitely going to give it out and make sure you got a pretty good account size. You can hold the trade for long. So I'm just going to start my buys because this opportunity looks so good. And I'll tell you, when you use the concept of index precedent, you can nail some kind of serious trades without even have to go through a bunch of analysis. So you see my analysis here. I don't really like to go so crazy. I apply a lot of concepts, some crazy, but they work at the end of the day. So if you get a question, you just go ahead and ask me. All right, like seems like nobody got a question, so I'm gonna definitely drop the recording of this analysis in there. So we know what we're looking at for this week. I just want to go over it one more time. We're looking for a correction, and our invalidation point is 28,300. It's kind of tight, but it's a bullish market, so you want to keep things really tight. So 26,300. Worst case scenario, you can get to 28,500 though, but I just want to keep things at a minimal, pretty tight. 28,300 is pretty good. 28,500 would kind of be extreme if price want to reach out for that. If price reaches out for 28,500, then I got reason to believe that we're going to continue and fill this gap. So like so I was telling you, what I want to do primarily is when the market opens, all right, I'm just going to enter a buy position, just straight up. I don't care if the Dow going to fall first. I'm just going to take my buy position first. Someone's talking about stop loss. Stop losses. How you gonna place your stop loss, bro? I'm probably going. So just clean lows. I like these lows. If you're gonna take a buy, where you're gonna place your stop loss, and predominantly if you don't swing trade, you want to deal with a big stop loss, and that is the issue with swing trading because the stop losses are kind of huge, and that's something not everybody's willing to do. So if you're gonna take this position, you're gonna build a buy position anywhere here. You're gonna take a long position around, say, around this level should be good, and you want to swing all the way to 2,900. Like, look at the risk to reward ratio. That's 7.16, and this one's gonna probably take a month to complete. So you really want to hold for long. I don't know how many people can hold though, but like me, I just hold. So, and pretty much you want to put your stop at 28. I don't know, man, probably 28 to 50. Kind of huge. Yeah, kind of huge like that. I don't think everybody can do that. All right, this is actually pretty huge, way huge. So a little bit about like that. I know, man. The issue is we're definitely gonna go high. We're gonna feel those inconsistencies. So I don't know how you're gonna do it. You could probably scalp your way through too. If you like to scalp, you just could continue buying the dips and scalping your way through. But I like to stack, just get an opportunity, put a buy, opportunity, put a buy, corrective move back, corrective move back, corrective move, like easy drill like that, really. So if you got questions, yo, you just go ahead and let me know. So
Hey, wait.
hey, bro.
What's up, bro?
I don't.
Can you hear me?
Yeah, I can hear you, bro.
So, I'm looking at it. So you're basically saying entry points for buys would be at around 26,300 or 27,200.
Yep, yep. We could get.
Correct?
Yeah, definitely, we could get that. We get in.
Okay, now,
That's the fair value. You want to buy it's a fair value. Okay, I don't know. Oh my God, I'll sign this up. So
shit.
I'm gonna give you more explanation
Freaking.
of that.
So yeah, all right. So I guess we could sell from that, from I guess from like the open
We don't
to
want to sell. We
so
don't want to
that,
sell.
right?
You trying to scalp? I don't think you should sell, bro. It's a bullish market. You want to
No.
get corrective move and put your buys in there.
Okay. All right. So basically, let's let the market come back to us and well, come to us, and then we just enter the buys.
Definitely, definitely. I want to show
Yeah,
you.
like 2 weeks ago, it was on point, and we could have literally held
Yep.
a
Actually,
position
also
turning.
sell the previous buy. If you were in that previous buy and you held it, you were gonna be in serious money, bro. Like I am.
I know. I literally was with the guys, and we were gonna take it, and we ended up falling asleep. It was on a Sunday night, and it hit literally like maybe not too. It's not. It didn't hit that price exactly, but it hit a little below because the CPIs affected the market, and it shot it right back up. So then from there on, the market just stayed bullish for the rest of the week, and we could have held that position for the entire week. And I realized I was like, wow, we missed out on more.
K2, yeah, we headed for the top now. K2, yeah, we call it when it drop down.